Welcome back. Let's talk about your money because mortgage rates fell yesterday to their lowest level in more than a year amid a lot of economic uncertainty, intensified by the ongoing federal government shutdown, entering now day 24. So financial advisor Tim Dahlberg from Burns Financial joins us on set now to discuss really the look at the fourth quarter. Earnings season is here. Tell us what you're thinking about this, Tim.
Yeah, earnings season, we've seen some of the companies reporting over 85% right now reporting higher than expected earnings, which is a good thing.
Yeah.
We look at the S&P, we look at their earnings growth for this period versus last year, we're up over 9.3%. So that's extremely positive for the stock market, especially considering we had the sweeping tariffs that was back in April. So the impact hasn't been as impactful as we saw previously. Also, broadening out in the stock market, which we like. We see business confidence is rising. Market's been resilient. Economy's been resilient. So it's always a positive thing. And we think going forward, it should be good as well.
It's such a contrast to the conversation going on right now about the government shutdown and people waiting for their paychecks if they're federal workers. Why do you think that on the corporate side, there has been a 9% earnings? Talk about that. Yeah,
well, I think we're resilient, right? You know, we're entrepreneurs and we're thinking, hey, let's try to make some things happen. We know with the tariffs and everything that they've put off, we got to find alternatives. So it is. Business is confident because of some of the regulations and policies, but yes, there's still some uncertainty as far as the political. Some of the things, government is one of the big issues, so it is quite a contrast.
It's interesting that you say entrepreneurs, they find a way to flex, right? To say, okay, we see this as an obstacle, you got to find another way around. What are those alternates that have been successful for companies that you see them doing well anyway?
Well, yeah, and I think when we look back at the tariffs, right? We thought it was going to be a huge impact, and it was, especially in certain industries and sectors, but we've come back to the table. Most of the major trading partners, we've made negotiations, some trade deals. There's alternatives. Where do we get it rather than bringing it from, importing it in? We can make it from home. But also, I think one of the biggest things kind of going forward is China. That's our largest trading partner. If President Trump can make a deal with China, it's going to have a big impact on the U.S., big impact on the economy going forward, and keep those costs down.
What other markers are you all watching for the rest of the year? Yeah,
so we'll always look at, and again, you go back to the government shutdown. So a lot of the big reports that we're typically looking at, CPI, PCE, we're not getting that.
They're not there.
They're not there. So we know inflation is still an issue. We're going to wait for, hopefully the government gets back together. We'll come in the next coming weeks, we can start seeing some of those reports. We don't see it as a huge impact right now, but it's one of those risks that we're going to be monitoring going forward.
You know, it's interesting, Tim, a lot of times when people say we don't have it for now, but you can look back historically, yet this year has been unprecedented on so many levels. So is last year's stuff going to be applicable to your forecast if you don't have the documents because of the government shutdown?
Well, no, and I think what we can do is we can take a look at the trend over the last probably year, right? So we know inflation is coming down, which is good. We can kind of expect that in the future. But there is still some uncertainty, right? We got the government shutdown. We still got the China deals. We actually just had Canada. There was something this morning that came out. So we can be cautiously optimistic about the future and about the markets.
Tim, thank you very much for your time this morning with us.
Thank you. Thanks for having us.
All right, let's check in now with Zach Fradella for